What's up? What's up, Addison? Good to see you, man. Happy you could make it at this 1 hour delayed stream. All right, I think this stream, I've already checked a little bit just now the charts and the stats, and it is just a until now pretty involatile day. There's only a couple. So if I use hybrid filtering, this is non-conservative filtering. This is what my overview looks like, which is terrible. There's really no volatility. If I use conservative filtering, then my chart or my graph here looks even worse. This is it. So this is simply a very undecided day. So I think what I'm gonna do this stream is we'll talk a little bit about one that it's kind of showing some OPUSDT, which is the reason why I'm on OPUSDT. And once that's done, I think, well, if you have any questions about any of the features, then obviously feel free to ask. But I think what I'm going to do is talk about some of the newer features that I'm working on, a little bit of a sneak preview. I know I've said surprise for now, but I obviously also want to inform you on what I'm working on. So I'm gonna show you what I'm working on then later on a bit, and that's the way we're gonna do it. So first of all, if I see this, if I come to the chart and I see this, or to the chart, to the statistics, I'd rather wait and not do anything, to be honest. So I am gonna cover OP USDT, but if I would really have to give an honest answer, if I see this, for me, that simply means there's no trade at the moment. Because this clearly showed there's no volatility in the market, nothing is happening. And, even if we have one very strong performer, then that's something, but I'm not very sure if this is considered to be very, very strong. But in general, this usually means that there's just market-wide, there's no real volatility. So I think the main takeaway for this stream already, because it's always dangerous to dive into OP in this case, but I just want to emphasize that, there's a time to take trades and there's a time to not take trades. And in this case, I think it would be best to wait. But since I do want to cover at least something, I think it's good to dive into it. So, as you know, I have some other indicators on now. That's because I am working with them at the moment, so I'll keep them on. But one of the things I always have on is my periodic volume profile when looking for trades. Well, there we go. There we go immediately. So I'm looking for NDP POCs here. And I immediately see that we're like this is pretty much NDPOC as well. Wait, what is this based on? Let me check. PVP. Yeah, 1 day. All right, so maybe not. Maybe we passed them. Maybe we passed the naked daily point of controls. Well, to me, if I see a naked daily point of control hit on a pace like this, then that's immediately no-go for me, right? That's why I'm looking at this. But let's first start with the statistics. The reason I'm looking at OP is because OP has a bull and a strong bull signal, and if I press hybrid, then it is a strong bull signal on the daily and 8 hour. Now, hybrid simply means that, or well, not simply, I've discussed it at length last week, so I won't go over it in depth, and there's a tutorial, but basically, if our 0 would hold as P1 or our 1, then this one is going to be more accurate, or in case of the, yeah, let me delete this for a bit. I'll get back to that later. In case of the 8 hour, if this one holds, then this is going to be the most. Yeah, then this is going to be the most accurate to use hybrid, right? So if this holds, then you want to use this. But yeah, for me, no. I would honestly discard this trade. That's why I said the danger is if you once again, if you see this like on hybrid, this is like non-conservative filtering. There's literally nothing going on. It's just boring. I would probably just wait until this 4 p.m. UTC window, right, where we have this 8 hour window until the end of the day, and then maybe then we can see some 4 hour, 8 hour things showing up. But for now, I wouldn't force it. One of the reasons I don't want to get into anything right here is because the 8 hour low. I mean, for me, if I want to use, that's why I like hybrid filtering. It's kind of like this low needs to be nice and it's horrible low, right? I don't like the low at all. And the reason for that, something I alluded to often, is that if you have price action like this and the pivot is here, then that's in my opinion a bad pivot. What you would rather see is something like this and then the pivot here, or maybe here, just anywhere that at least price took some liquidity, right? This is the thing that keeps happening. Price takes some liquidity, doesn't have to be really big, but could also be something like this, and then goes up, right? Then you have a pivot here or whatever after a liquidity grab. Here in this, example on the 8 hour, there is no liquidity grab. Let me delete that. There's no liquidity grab. Very small, but not what I want to see. But in general, it's just like this small grind up, and then we put in a pivot here. So for me, if I see this, I don't like this as a pivot. I really don't want to give it any, not a lot of importance. So for me, coming to this, it's like the first thing I recognize is, well, there's no volatility in the market, right? We can look at uni maybe because that's the only strong bear there is on this one, but there's no volatility in the market. And then, it's, as I said, it just means a general lack of volatility. Not much is happening. Obviously, especially if we want to take continuation trades, we need some form of volatility. There is none right now. So it's best to wait. I would rather, on days like this, wait until a little bit later, 4 p.m., UTC, get price to maybe do something or not, and otherwise sit on my hands. I did now check. Oh, now something is happening on the current hour. And the 4 hour are flipping a little bit bearish. So that's actually pretty nice. There we go. And obviously on hybrid, you're going to have way stronger signals than on non-hybrid. Another sign for me that I don't want to long here, right? So I just concluded that I don't want to long this because I don't like the 8 hour low. And in general, there's a lack of volatility. But what I said is that I want to wait for volatility to show up, and lo and behold, some volatility show up on the current hour. So the current hour is showing some downside. And as I said, the one thing I wanted to look at was Uniswap. Well, let's look at let's see which Bitcoin also has a strong bear signal. So let's look at Bitcoin on the 1 hour, see what it is doing. Just loading that up. Yeah, so we do see now that why that daily or that 1 hour is showing up as bearish, because we have, oops, that's the wrong one. That's the wrong one. Because we have this massive move on the 1 hour, right? And right now, basically what it's saying is that there's more room to go. Man, I use the same filter. I use the same filter on the daily. I have it saved here on my bookmarks. But so, I mean, obviously for me personally, I wouldn't personally trade the 1 hour. So it's not like I'm gonna look for any place on here, but obviously this is gonna be the first one that is gonna give us any type of signal, or at least, if the 4 hour will turn bearish, then it will start with the 1 hour. So right now we have this 1 hour right there, which is showing some bearish signals all around. If I would look for Bitcoin, where's Bitcoin? Let me remove that. Yeah, you immediately see something interesting. So this is obviously the New York Open candle, and we can see that in the New York Open candle, it has been 19 days since Bitcoin put in the 1 hour P1 during the first 5 minutes, right? And that's actually quite rare. But in this case, I'd probably go for the 10-minute pivot group, so I can see how long it's been since the 10 minutes. First 10 minutes put in a P1, and that's been 7 days. So it's not that weird. But anyway, you can see that so far, this 13%. Oh, this is actually crazy. So this is 13%, and this is 83.1%, which means that there's a very low chance of taking out this hourly high and a very high chance of going lower. We just tapped this fair value gap right there. So, this hourly block is going to go lower. So if I see this, say I'm looking for a long, I will not be interested in looking or at least entering the long as long as I see stats like this, which is, very easy to see here as we just saw pop up live in the stream while we were, requesting the trading gods for volatility. We got it. So, say I'm looking for a long on the daily and this shows up. I mean, that for me is a clear sign that, okay, let's not take a long just yet. Price needs to go down. In this case, I've decided I do not want to go for a long, right, on an OP. And I said, no, it looks bad. Let's not go for it. And now here you go. The 1 hour already took out the 1 hour low, right? So because we had like 80% of these candles go lower. And remember that the 1 hour is now automatically filtered on the correct hour. So right now you see only the data for this, this current hour, which is hour 13 UTC. So in this case, the opening candle for New York. So this data that we were looking at is filtered based on just this current hour, right? Hour 13 UTC. So it's saying 80% of hourly candles in hour 13 UTC will go lower. So, I mean, maybe some of you will be trading this, will be scalping this, will be using the 1 hour to scalp. I personally wouldn't, but that's not because I don't think it's effective. I actually think it is, especially since the last update. It's just that, it's not my time frame of choice, but each their own. What I would use it for is at least an indicator of what not to do. In this case, if you would be looking for a long here, which I already said I personally wouldn't, but say you are and suddenly this shows up, then at least you can wait. If you're looking for a short, however, and you see this show up, then obviously oh wow, look at CRV. That's an interesting one to so say you're looking for a short and this shows up, then obviously that's something you do want to see. And you know that if the 4 hour is going to turn bearish, then the 1 hour is going to turn bearish first. So if we look at CRV right now, which had this massive drop, again, something I do not like here though as a high, but let's check it out. Yeah, we got some fair value, so liquidity here that price is probably searching for. We've got P1 at hour 0, P2 at hour 13. Let's check out the CRV, because CRV has a shit ton of bear. I mean, I've rarely seen this. I mean, I have seen it, but 4 bear signals daily, 8 hour, 4 hour, and hourly. Let's see how much bear this is. So we have CRV right here, and if I go to the daily, oh yeah, that's looking pretty good. That's looking pretty good. So 78.5% of days have more distance to the downside. So the one thing here is like, this is not my favorite pivot either, but at least we had that liquidity grab just before, right? So then that's what I said earlier, that if you see this, then I'd rather have the pivot here, but here is also still, better than if you see this and a pivot here. So, this is a bit better, not my favorite, but better. Not something I would discard. I obviously want to see naked daily point of controls. Didn't see any. This is something I would like to see. We hit a naked daily point of control here, which means we had a liquidity grab here, rejected, and now price is moving towards this fair value gap right here, which is obviously a draw on liquidity too. So this is definitely from a PA perspective the thing you want to see. The only, yeah, why not? I was checking this maybe a bit tight of a range as well. Yeah, it is contracting here a bit, so that's something you prefer not to see. We had this massive liquidity grab here. But I mean, if all four, so on a high time frame, I don't really like what I see because it's pretty contracted here. And as I said, I prefer not to take two contract trades. But then again, it's not too bad. It could definitely be worse. There's definitely still room. You can see that price is definitely still moving. So not something I would discard. And then let's see. All right, so then we have, these are not, the weekly is not going to give us anything. The daily is preferring some downside. The 4 hours also preferring, or the 8 hours also preferring downside. And so this is what you want to see, right? This is what I mean. This is a really nice, damn it, why do I keep doing this? Why do I keep pressing text when I do not want text? Let me just put it there. So this is what you want to see, right? Exactly what I said. You have this nice pivot right on top of there. So this is what you want to see. A beautiful pivot. Just while mentioning it, I should probably program this. Probably enter this as a statistic that you can see whether a pivot looks like this or not. That would be pretty dope. So, this is what you want to see because you had this liquidity graph here. I mean, for me, everything kind of lines up on CRV. It's looking pretty nice. The only thing is that you had this liquidity graph right here at the lows. So this local liquidity graph, but still with everything else lining up, I do think it's a pretty solid setup for downside. Let me check the 4 hour. Kind of the same thing, right? You have this expensive move. So here's where it gets interesting, right? If you have the current daily pointing down, well, from here, obviously, we cannot take a trade way too far. Well, at least not if you would take this as invalidation. From the 8 hour, it's probably also too high. But what you could even do is say, like, well, hey, I could take the current 4 hour high, expecting that to hold, and then just manage my trade like that, which would already give more of a opportunity. I don't know if I would do it because there's still quite some 4 hour candles left. Preferably, I want to see a little bit of a retracement still to go. So maybe a retracement into here, followed by further downside, because there is this small fair value gap right there. There's this fair value gap right here. I mean, this is probably going to get confirmed. It's probably going to get confirmed. Yeah, so something like that would actually be dope. If you have right here, if you tap into here, somewhere in the fair value gap, you could take that, you could put and this is what I mean, you could put your stop loss above the 4 hour high and treat it, if you go down, right, and treat it as the daily trade. So in this way, you're kind of using your 4 hour as invalidation in a higher time frame idea on the daily. Obviously, this is more risky because there is a chance that price would do maybe something like this, like you take it out, then you go back up, and then go back down to create that further daily low. And this could happen without invalidating the daily idea. That's what I'm trying to say, right? So if your idea is a daily short, then obviously you have to keep in mind that this might happen. But also, obviously, the longer this day progresses, the less chance for that to happen as well. So, and what I mean with that, if at some point you're really close to the daily close, then obviously you're going to have less and less time to go back up. If your bias is down, then the further you are in the day, the less likely it is that you're going to, have some massive, like here, at this point, this will probably not happen anymore. Right? So in that way, you can use the 4 hour, especially in when you're very confident in the direction. It might be worth using a 4 hour in a more aggressive entry like this. In this case, I'm not very sure if we're still going to go there. You could even use the 1 hour, right? You can even use the 1 hour because the 1 hour was also bearish in the same light. So you could have even said, well, I'm going to enter here on the 1 hour. Like wherever you want, and use that as my stop loss. But obviously that is very aggressive, right? If you use a 1 hour as the invalidation on the daily trade, Uh, the benefit is obviously that you are going to have a very good risk to reward. The drawback is that it's quite degen. So, the risk is obviously higher. But just for the sake of argument, this is something you could do, right? Where you say, well, the current hour high is going to hold, so I might as well trade into that. But I don't think I personally do that, but each their risk tolerance, right? It is something you can look into. Because right now it is looking like, I mean, look at that. Strong bear, strong bear, strong bear, strong bear. And that's on hybrid, so you could also check conservative. Yeah, not too bad. Not great, not bad. I'd say it's good if I would have to put a word to it. Good. So this is one that is looking interesting for further downside. This is one that's looking interesting for further downside for sure. Obviously, then it's also dependent on what the rest of the market does. But yeah, I do like the way this looks. And if you look at the liquidity, then this is the nearest liquidity that needs to be taken. Check for naked dailies. Naked daily down here. And we are in this more or less range-bound price action right here. If I look on the higher time frame, yeah, it's basically a very high time frame range right there. But yeah, given everything, I would be inclined to take that if a good opportunity presented itself, right? Because once again, on the biggest one, the daily, well, that's on conservative. I have it on hybrid in this case. So 24.7, one out of one out of four, but 14% on a hybrid filtering. Not a very high chance of taking that. And looking at these right here, day since P1, day since P2, 1890. So it's definitely not a strong P2, hour 13. So if the high holds, then the low has to go. This one, yeah, nothing too special could definitely be. But given everything, I would say downside is good on that one. And that reminds me of something what we can also do. And obviously, this is where you apply your TA, right? And look for further setups. What we can also do is actually filter on this. All right, so there you go. Maker with a very improbable P2. But this is one of those setups that I discussed last week where you don't have, and that's interesting. All right, so you don't have a conclusive P1s with bigger distance, but you have a very high days with more distance, and the current P2 is set at hour 10. It's been 235 days since this has been P1. It's been 209 days since it has been good P2. So you know that this is a very improbable pivot, very improbable. We have some fair value gaps below us. Even on the 4 hour, I see, let me get my PVP indicator. Not too much to the downside, but it's pretty clear this thing is trending down. And we just had this, this move up, this bam, this spike up. And I mean, if I see this, I'd rather assume continuation down. So from here on, we have been in that downtrend right there. And this is actually crazy, man. Look at that. 64%, not even the worst. But so if you see this, we had that liquidity spike. So I do think this could be a tempting high for the week. I mean, we don't have to guess. Let me just check Maker. Yeah, so the high of the week is pretty inclusive right now, which is what I want to see. I was just looking if this is an improbable weekly P1 or not, because obviously the flip has to happen. I don't think it's improbable. So going back to this, right, is that we cannot confidently say that Maker is going to hold based on this statistics, but what we can confidently say is that it's very likely we're going to have more distance between P1 and P2. And then the next question becomes, well, which direction is that going to be? Current P2 hour 10 has been 235 days since that has been a daily P1, which means that for this to happen, that would be pretty rare. And let me just check the. No, that doesn't make sense. I want to check the 3 hour, but these are of the same. No, wait, they're not of the same 3 hour. Even on the 3 hour aggregation, it's been a while. Yeah, so it's the same thing. All right, so this obviously is a way more risky strategy. Well, I want to emphasize that once again. You do not have confirmation from this statistics. We do not have any confirmation from these statistics, right? This is both less than 50%. Obviously, there's no real edge here, but what you can see, and once again, the benefit of this strategy is that you have a better risk to reward because 95.1% of days have more distance between P1 and P2, bearish days, that is. And in this case, you get there really early because we see that, it's been many days since that's P1, 235 days ago. Hour 10 was the last P1. 209 days ago, hour 10 was the last P2. So, even let's say we degen, or let's say you shorted from here. We're a little bit too late now. But let's say you shorted from here. You could say, well, this is your shit RR, but here comes the kicker. If you go to distance statistics and you go to Maker, I press manual. So let's see how far 50% of these things come, of these days. So let's say 6%. 55% of days go further down than 6%, right? So what I could say is that we have P1 here to P2. Look at that. That's here. That's all the way here. Damn. Nice. See, that's what I mean. That yes, it is more risky, but the potential R is also much better. So that's what I mean. So say you enter here on the daily point of control, and I mean there it already goes, right? There it already goes. You could, I mean, look at that. You could target here. So you think here, well, your entry is shit, but because your potential risk to reward is so much better, actually makes a lot of it makes sense to take it. It makes sense to take it. Now, this is something I showed last week as well in the analysis, and it played out very nicely that time. The only thing you have to be aware of with this strategy is, well, obviously it's more risky, but that what could happen, for example, say you have this very low probability pivot as we have right here, then what could happen is that you see something like this, that you take it out, and then this, right? That you go on, say this is a higher probability pivot in the afternoon, and then you go up. So that's why with this strategy, I would definitely manage this position closely. Last week was the first time I even noticed this strategy. But this is one way to use it. So you have to remember that there's a more risky strategy, but potentially it gives you a better risk to reward, right? So if your TA lines up and you have a better risk to reward, then obviously your win rate can be lower. So in the end of the day, it really depends on what your composite win rate the composite is of your win rate versus the risk to reward to depend how effective the strategy is. Good morning, Elena. Welcome. Knockout Trader. Try filtering the daily summary stats by the first day since P1 column. You got it. Select everything. When has current. So this one seems like a P1, P2 flip today seems quite possible. Yep, these do have been a long time. I would take these as main ones. All right, but these are all bullish. All right, so what I do then is I select these and then I select all these using Shift Select. Then you can see that direction of these is actually bullish. So in this case, it is P1 is the daily low. In which case it would further strengthen the more or less bearish bias we just crafted because indeed it's as you'd say P1 P2 flip seems likely if you look at this, especially if you look at this. Yeah, this is actually a really good way, man. Shout out to Knockout Trader for noticing this, or pointing this out because this indeed shows that the likelihood of a P1 P2 flip seems pretty high since it's been a while since this happened. And let's check actually 3 hours right here. Oops. Yeah, I guess I need to filter that first. Well, never mind. I'm mostly, when I use 3 hour, I'm mostly interested in these percentages, not in the day since P1. These columns I'm mostly interested in looking at when hourly. But anyway, I'll finish my train of thought is that since these are bullish and you can already see the retracements are getting pretty low, right? This is already the 0.6. So indicating a bit of weakness, unless it reverses, obviously, but it kind of has confluence with that bias for downside because these are bullish, so they're all the daily lows. Let's look at one like Rune, for example, Rune USDT. See, daily low. And we just had that naked daily point of control. Man, this is actually a good way of finding reversal trades. Because this is also like really like, if you see this stat, yeah, because yeah, this S&P here, so this actually looks sick. So it's actually a really good way of, man, thank you, Dr. Trader, for pointing that out. Because if you see this, then obviously this could indicate there might be a reversal trade in the works because you have the P1 as the daily low. It's been a very long time since these have been the daily P1. So in that case, it seems targeted, right? And then you touch this naked daily point of control right here. I mean, that's simply beautiful. So that's a very interesting one. So right now, still everything seems to be pointing downwards. All that we can find so far in statistics point downwards. Wait, I didn't see a second. Combined above by looking at days since current P2 has been P1. Yeah, exactly. So these, what I already did, are much more favorable than these, except for maybe this one's 71 days. Been a while for SSV, whatever the hell that is. But so that looks pretty good. So this is another way of using it. Yeah, I must say, like I just shoved this part of the update in at the last moment, literally on the last morning, this day since P1 and day since P2, but it's so far proven to be much more valuable than I thought it would be. So you are right. It does seem like if you see something like this NDPC hit very bad P1, then obviously that is also one way of using it. I mean, these are starting to get multiple strategies, and I will have to do a deep dive into these strategies. But it's really cool because this is a potential reversal strategy. Mm-mm. Let me check if that will happen today. An alert. So in this case, right, you could short targeting the low. I do think downside is going to be limited, and I'm gonna explain to you why in the sneak preview part of this stream. So that one we concluded short. This one we concluded short, right? Maker. Let's see if we take that out today. Maker USDT, new P2. And we also had CRV. So everything we found so far is pointing down, right? CRV also here. New P2. Set the deadline for tomorrow because if it happens after that, then it didn't play out and I'm no longer interested. So this is really interesting. So like the CRV one we found using distance statistic, the maker, and what was the other one again? Rune. We found using the last P1, last P2 columns. And you could probably do the same here. Let's see GLM. Let's see what GLM is doing. Yes, I really liked that Rune had this tap of, but we took some liquidity here as well. I would consider it more or less equal highs, but Rune I really like because you had that naked daily point of control hit. But it's kind of the same thing, right? You can short target lower. Look at that, beautiful. Naked daily point of control right above. So say you would do something like this, would be a beautiful short. And again, this is based on that it's been a while since Adam put in P1 at hour 3, 120 days. So you can do the same thing. Already going down. And you're at the top of this, what looks like more or less a range. Yeah, this is actually cool, especially when you're on the top of the range. This is very interesting, very, very interesting, right? Because the short here obviously makes more sense than the long. So because you're at the high of this range, and therefore you'd be interested in taking shorts. And in this case, when you have this low probability lower here, low probability P1, then obviously it makes sense to look for a short. In this case, the entry is gone, but very, very cool. Really cool. Man, Knockout Trader, great find, dude. Only noticed just now myself. Nice. Man, that's a really good one. I'll have to note that one down. I'll have to note that one down. Let me actually note it down so I don't forget. Since P1 for. All right, noted it down. Legend. Nice work, man. All right. So all in all, still looks like downside. We can check what multi-time frame page is saying. I don't expect that much downside though, to be honest. Still pretty volatile day. Though I'd still be more aggressive with my profit taking. Yeah, we still have some bear signals on the hour. Quite a bit, even. CRV. So, if you're completely degenerate and you want to take that short based on the 1 hour, then this would be an entry, right? Where you take this as invalidation. I personally wouldn't. I really don't like this high for the same reasons as I said. This is the high on the 1 minute. Not a good high, in my opinion. I would, yeah, but, if you're very confident in downside and you have something, you're a better scalper than me because I've never been a scalper. And I'm not, then that is something you can definitely look into because the 1 hour is saying that further downside is more likely on, pretty much everything. And this is on hybrid mode. So that would work better if, P1 is put in at the start of the day, which it is. and then you can target for lower. But yeah, I'm no scalper. Like, what would this be? 0.37, 0.77. I mean, I guess if you're a scalper, it can work, right? With the potential to turn into a 4-hour, 8-hour daily trade, because stats are on your side. And I do want to say that I changed the 1 hour quite a bit. I've said this last week as well, that on the background, this filtering is now being applied for the current hour. There's more accurate filtering based on this, whatever you decide to use. Conservative filtering is obviously going to give you the more conservative estimate, so you see a lot less. But even then, you still see a lot of quite a lot of strong bearish signals right there, which is really interesting. Also want to look at sushi. I saw it had also more or less. Let's see. Oh yeah, holy shit. 98.6, but that basically means it did nothing. Then maybe I'm confusing it with uni. I'm probably confusing it with uni. Wow. 89%. So let me just keep this one open. This one would be funny if we take out the low. Then that 1 minute or 1 hour time frame could have given you a great entry. Actually, I honestly I think you can use it if your TA is accustomed to it. But let me take a look at uni. So uni is interesting. Oh yeah, beautiful. Yeah. So oh yeah, wow, wow, really beautiful. So amazing, amazing setup in my opinion. If I see this in terms of once again some confluence, we had this naked daily point of control hit right there. Then we SFP'd the naked daily point of control hit. Then we not only SFP'd it, but we put in the high like so. Right, beautiful double liquidity grab. I mean, it doesn't get any better than this. So I would be definitely, in this case, I would definitely be confident to say, okay, I'm going to use hybrid filtering for this, right, for uni, because I think the high looks great. And if ever this is going to be a high, then this will be a good time to do it. And then what happens is that we have 1 out of 5 chance of taking out the high, and 90% of days result in further downside. And combined with all the other things we have been seeing, that it looks like further downside is likely. That's a very attractive setup. Also because we see that the bullish setups with the P1 at the lows seem to be likely to go down. To have that further downside. And this one just also looks really nice, which would once again be more of a reversal trade. More of a reversal trade. So yeah, also this one looks pretty nice. Let me also set an alarm there. And this is actually crazy that you have. So, but this is actually the reason why I made hybrid filtering. So you see, I mean, this is very low, 17%, and this is really high. So the contrast between this one and this one is massive, right? This is a massive contrast. And the reason why you have that now is because of hybrid filtering. If we were to have only conservative filtering, the contrast between these two is going to be less. See, then you have 28 against 89. Now, this is the reason I integrated hybrid filtering because, and this is also what I explained in this tutorial that I wrote and what I said last week on the stream, right? I explained this very thoroughly on the stream as well, is that basically, and again, I would really recommend reading the tutorial. I still have to make the video tutorial. I will make it. I might make it today, actually. But basically, there's a very valid use case for using hybrid filtering, and especially when you think the high looks really good or the P1 looks really good in terms of PA. In this case, I do think it looks good. Then it makes sense to it could very well make sense to use it. It very well makes sense to use it. Preferably, I would have seen it at the lows because you're here in this local uptrend, but we don't. And so far, everything we've seen does indicate that there's a chance for downside, right? So the reason, if you think this one looks good in terms of PA, and you see, and then you can say, well, I'm going to use hybrid filtering, which is completely fair, right? Once again, read the. There's even another version I could make that would have the percentage even lower. So this is still somewhat conservative. I could also say, okay, I'm only going to filter the days on hour 0 and 1. I'm not doing that. You could do it. So, for example, if I go to uni and I say, well, I think the high is going to hold, and I don't have this as an option because I don't want to have people go too degen on this. And I do think this is definitely the better way to go to include everything. But say you, for example, say, well, I'm only interested in hour 0 and 1 because I think it's going to hold. No, wait, that actually doesn't make sense if I do that. 2.7. Yeah, no, that doesn't make sense. I'll scratch that. I'll scratch that one. I'll scratch that one. That one doesn't make sense. But still, the 17% does make sense. And then this difference is just massive, right? So if you have, like, how far would this be? Like, I assume this would be more or less 50%, negative 7.5%. So say you do get that displacement, this would not be a weird place to go to, the liquidity at the lows. So that's also like a very good risk to reward. So this is what I explained in that tutorial, right, about hybrid filtering, that there are use cases where it makes sense. It's not always going to make sense. In essence, in a perfect world, if you would know, like, okay, we're going to have a P1 at the start of the day, then hybrid filtering is the way to go. If you know that we're going to have a P1, P2 flip later in the day, then the other conservative filtering will be more accurate. Obviously, we do not know this in an ideal world, or at least we cannot be certain. But even then, there is a very real use case to be made for using hybrid filtering, which I explained in the tutorial. So read the tutorial or watch last week's live stream or wait for the video tutorial I'm going to bring out on it. But there's definitely a valid use case to be made. And then, we're going to have a potential bigger risk to reward, right? Which is the big benefit, because you see here 17.1 against 89.9, which is obviously a massive, massive, massive difference, a good contrast. And once again, the reason why I integrated this. So, but you're going to be more sensitive to P1, P2 flips later on. So if that would happen, that's possible. But obviously, if your risk to reward is higher than the actual losses you take on a win rate, and I even wonder how much more losses you would take on the win rate because there's less false negatives, or there's more true positives. So you're going to get more signals with hybrid filtering. You're going to get earlier signals, which means you're going to have more trade opportunities, right? And the question is, well, you're going to probably have a bigger risk to reward, tighter stop losses. But the question is, okay, how many more trades are you going to win or lose based on this, right? You could say, well, you're going to get more aggressive signals, so you'll definitely take more trades. You could definitely get more signals, but in what proportion are you going to win or lose more based on this, right? I do not have the answer, but I think it might be surprising. I have a hunch that I'm not sure you're going to lose that much more proportionally to what you are going to win, simply because of the more holistic view of things. But once again, read the tutorial on it. Okay, let's go further. What's your macro view for Bitcoin at the moment? Same as that, and I still think we have to go up, but I'm not paying much attention to it because nothing really is happening. For me, we're still in this range. Let me get this out of the way. This And by the way, I'm not focusing too much on TA, as you know, because I really want to have these streams focus on, how to utilize the dashboard and how to find directional biases, stuff like that. And then the streams with Tim, for example, are more focused on the TA side of things. But on the forefront, I want to focus on how to use the dash. My macro view is still the same. So very quickly, I think we're still in this range right here. I still think it's a reaccumulation. So I would have to use the concept. So right here, we're now at the lows of this range, deviating below it. I still think the macro is up. I still think that this is too much liquidity to be left behind. Right, and we have this going down. I think all these shorts must get taken out. We did, we closed that, what was it, a monthly fair value gap, I think, right here, quite beautifully. I mean, it's crazy. Massive, massive contraction. And, if I would put it in mark structure terms, then what I'm seeing is right here. This is the weekly mark structure for me, right? So we have the weekly low right there. Very low, but it is what it is. And the weekly high is right here. Then if I go to the daily, and what I see is this right here, mark structure, which means the daily low is actually, let me change that. I think it was zoomed out too much. I think you can take this as the weekly low. Yeah, you can. That's enough of a retrace for my system. And then the daily would be this. Or maybe the 4 hour. Yeah, I wouldn't consider this daily. Let's say 4 hour. Doesn't really matter. It's definitely mark structure. I know a lot of people would call it daily. I'll just call it 4 hour. So for me, the main thing is that you are still trending up, and this, I don't even know how much. I do think I like this better, to be honest. And then this would be the daily low, I guess. Let's just be aggressive and keep it like this for now. Then what's happening is that we had a GP hit right there, golden pocket, right on top of that lower time frame market structure on that low. So, on the macro time frame in terms of market structure, we're still trending up. On the weekly and the daily. Let's say this is daily because I know most people are going to call this daily. So let me just change that. Most people are going to call this the daily, and I don't see a reason to become that bearish yet. I know a lot of people are saying like, oh yeah, like we're bearish, we're trending down here, but it's and I plan on putting this into the dashboard at some point. But high time frame uptrends have retraces. So this is the weekly, right? I mean, let's just actually extrapolate that. We have the weekly time frame trending as such, right? Now, lower time frame retraces, and I made very big articles on this. Man, it's actually a pity. Do I still have these? I wrote huge posts on market structure, massive. But lower time, so this is the weekly time frame, and lower time frame or the retraces on the weekly time frame, they manifest as either ranges, right? As such. So say this is that right there, or lower time frame downtrends, right? which would be the retrace on this higher time frame that we have. And that's, in my opinion, what's happening now. So we simply have this internal market structure, and I think a lot of people are making the mistake of saying, "Oh yeah, we broke market structure to the downside," because we didn't. We broke some local structure, somewhere here if you take it very locally, obviously, but the high time frame is still intact. And yeah, with elections coming up, I do think higher is still likely. So my macro view is still up. My macro view is still up. It's the short of it. All right, let's see. Let's see what our opponents are doing. I think we had CRV. So far, still hovering here. Rune going down. This was that reversal trade we're looking at. Sol was also that reversal trade we were looking at. Chilling right there. And then there was Maker, where we also sat down because this is a shitty pivot. All right. With that said, see, we're about an hour in. So we're going to close off with a little bit of a sneak preview for those who want it on what's next. So one of the things you heard me say is that I do think downside today will be limited. And I will explain to you why I think it is limited. Why do I think downside is limited? It is because of the new feature I am developing. Let's dive into the new feature. For whoever wants, if you do not care about new features or what's coming up, then please switch away now. Otherwise, it's going to be a little bit of a preview of what I'm developing. Let's hope my MacBook can take it, because now I have to start Windows on my MacBook while streaming. So there's a lot of heavy stuff going on. Let me actually just delete at least this one, this one. Taking a while to load. There we go. All right, so one of the reasons why I'm saying I think downside is limited, because what happened is that we opened up this daily candle and we had an unconfirmed fair value gap, right? So a confirmed fair value gap is, for example, here where we have, this close the next day. You can see there is this fair value gap. But before we had to close, we had the unconfirmed fair value gap right here, right? So in the end, it was confirmed here, but unconfirmed it was here. Today, we opened with an unconfirmed fair value gap as such, right? This fair value gap was this unconfirmed fair value gap, 3% high. Price range, 3.1% high. Now, enter the feature I am working on. If this thing is willing to load. Which it doesn't seem it wants to. Mm. Yeah, I mean, it's not Wave that's having a hard time because I'm running a shit ton of heavy applications right now on this thing. Oh, it's rebooting. Meanwhile, I guess I can create this one. There goes Maker almost. Yeah, that's gonna go. Ah, finally, the thing I wanted to show seems to be working now. All right, so this is what you're gonna see now is a heavy development stage, obviously. So what you see here is I've built a data model for fair value gaps. So this is the thing that's going to come. Among other things, I've more ideas. You already know I'm working on ranging metrics or metrics for ranges. But what I was saying is that at this point you started, and this is why I think downside is limited. At this point, you started with that unconfirmed fair value gap, right? Like if it would confirm right now, it would already be this small. But unconfirmed fair value gap 3.11%. What I figured out is that if you have a fair value gap of at least 3%, you can put that here, or sorry, 3%. Let me put it like this. Then you see right here, and this is by a really beta. Oh man, my mouse is dying. What you see here is that 85.86% of unconfirmed fair value gaps that are bigger than 3%, right? So if the unconfirmed fair value gap is bigger than 3%, 3% until, well, whatever this value is, then 85% of those will turn into confirmed fair value gaps. What that means is that 85% of these will not close this gap, right? So you know that in 85% of days, this would, or more or less, this would not happen to close this right here. So this is why I'm saying I think downside is limited for today because something like this would be rare after we left that fair value gap of 3% because it is just very unlikely, right? We know that 85% of them get close. And by the way, look at how much this changed based on the size. So if we take all fair value gaps, this percentage would be 43%. And that's mostly because the small fair value gaps to 1%, only 13% of those confirm. So if we filter those out already, you can see that if you take everything and you just go from 1% onwards, it's already 64% of those fair value gaps get filled, 2% onwards, 75%, 3% onwards, 85%. I mean, you could even say, well, I'm only interested in the one between 3% and 6%, and even that's 86%. So there's only really a 14% chance that you're gonna do this, right? That's basically the gist of it. which is why I'm saying, okay, downside is probably limited. The other parts that I'm very interested in is what you can see here. I'm just going to reset this, that if we take fair value gaps of at least, confirmed fair value gaps of at least, say, I don't know, 1%, then what we can see here is that 80% of fair value gaps have a first step within 12 days. 80% of fair value gaps get 50% filled within 26 days, and 100% fill, 80% of fair value gaps get 100% filled within 52 days. So not only that, we also know that it's very likely that once we close this fair value gap, it is very likely that we're gonna, fill it a bit, because not only that, we can see that it's very rare for price to continue after fill. In fact, most of the fair value gaps, 58%, if you take all of them, end up in a reversal, right? So 58% of them just do this. And only 18% do something like this, where you tap it and then continue. So that's actually very rare. So they act as massive magnets, right? Where you can see, even this, that 80% of these will get 50% filled within 26 days. And this is just pure fair value gaps. I'm not doing any filtering yet. This is obviously super beta. I just focused on creating the data model, which I created in the last 2 days, pretty much. This is worked since Friday. But what happens is that that once this gets confirmed, that if say price would go up from here, then within 12 days you have an 80% chance of tapping into that, and within 20 days or 25 days you have an 80% chance of filling this at least halfway. So this is the metric and by the way, this changes quite significantly per asset. So for example, if you look at Sol, you can see that this number is way higher. Solana, after 9 days, 80% of fair value gaps get a first tap. After 12 days, they are filled for 50%, and after 20 days, they are filled for 80%. So I'm still working on some other data for this, but I think the main thing what it's going to be is that you're going to have a dashboard where you will see which fair value gaps are active over different. So for example, this is going to be on multiple timeframes, obviously. But say, for example, we have that fair value gap on the daily, and we just have unconfirmed, then you will see on your dashboard, hey, we have an unconfirmed fair value gap. It's 3%, and 86% of them turn into confirmed, right? So you will see that for the current day or the current 4 hour. And not only that, I will create, and I still have to refine that approach, but I will create some metric that kind of gives an estimate on how likely it is to be filled within X days or whatever. But regardless, you see here that it's, they get filled very often, right? And usually very fast. Look how fast this line goes. And, most often they end up in a reversal. Another very interesting statistics I found is that 87% of, so say you have a fair value gap and you have this first step right here, right? You have this first step because you have the confirmed fair value gap right there. If you discount, so there's also occasions where this happens, right? You just shoot through, within the same candle. Discounting those where that happens, so if you do have at least not an immediate reversal, then 85% of fair value gaps that get tapped for the first time have their candle close outside of the original fair value gap. That is this metric right here. Whereas only 10% of those lead to continuation. That means that what most often happens is some form of fuckery where you have this fair value gap, you tap into it, you close back out. Probably a lot of people think, well, I'm going to short now. And then what end up happening is that you just fill it further, right? Or maybe reversing. So, that by itself might be already a strategy as well. I have to look into this. I have to really refine this. This is just a sneak preview. I'm just working on this for a little bit. But, this could be, if you see something like this happen, then that might actually be a long targeting into that. In this case, that didn't play out, right? But this is apparently the minority case because this kind of continuation happens very rarely, right? So this is the new feature that's coming. I think it's going to be pretty cool. So you're going to have like this dashboard where you can just see which fair value gaps are active, how fast they usually get filled, what the percentage chances of the unconfirmed fair value gaps turning into confirmed fair value gaps, and probably some other data. I'm still working on expanding the data model. So there's probably going to be some cool stuff to work with. So I hope you're looking forward to that. I definitely am. I think this is going to be really cool because this will also. So this is one of the things I actually wanted to do it because there, like right now, we are in this ranging environment, like in this range of fucking boredom, right? This is terrible environment that is not that good for continuation trades. But you can see that fair value gaps are very well respected, right? So here you have a fair value gap, which very often they end up getting filled. And if you are here, right, then you have that fair value gap. I mean, like suppose you're at this candle right here, and we just added confirmation. I mean, you can see here that within 2 days, already almost 60% of them. All right, this is sorry, this is Solana, so Bitcoin is less. Oh, even more. Within 2 days, 63% of fair value gaps after their first tap, right? Within 2 days, and that's exactly what you saw here. So in a ranging environment, this is going to give us more tools to work with because when these get left behind, for example, here, when these get left behind, we're going to have more of an estimate of saying like, well, you know, we're in this ranging environment right now, so maybe continuation trades won't work that well. But at the very least, we will be able to take these fair value gap trades because these obviously act like magnets. So if you leave behind a fair value gap, then we can say, well, these are magnets. We're probably going to touch it. Like no, not this one. This was not a very tiny fair value gap. I usually discount those. But so that's going to be very cool, right? Because even in this shitty small range, what we can then just do is wait for fair value gaps to appear. Like here, this one right there. Well, that's not the fair value gap. We see it appear. We know that within, you know, this is one day, 2 day, within 2 days again, you know, because we know 60% of them get filled within 2 days or tapped for the first time. Then you know these are magnets, right? So it's going to give us statistical edge in how often do these get filled within X number of days. So we can just use them as price magnets. I'm going to use the same theory to expand it to the wick fill strategy, the famous one, because it's going to be exactly the same, right? So once this foundation is built, I can simply add wicks to it. So a popular thing that you often see is this, you know, how often do you fill this with 50% or something on big wicks? So that's what we're going to do. I'm going to expand that pretty fast after releasing that fair value gap feature because once the fair value gap feature is set, it's honestly not that difficult to expand into that. And later on, I will do it for, you know, even more stuff. So this one is going to be very cool. But this percentage for me is so if I actually, even if I take candles fair value gaps. So what I said is that 86% have that after that first tap close outside. That is excluding candles that do this, right? That just completely reverse. But even if I include those, then it's still 66% right here, right? So most of them just do this, and I mean it doesn't really matter because all you have to do is wait. So if you see this tap and you see the fair value gap like being tapped close outside, then you know there's a pretty high probability you're going to go back in. So that's really cool. I'm going to get more stats on that. I'm going to build this out. This is really, I really think this is going to be pretty good. And at some point, I mean, this is not even filtered because what's happens is that, you know, these fair value gaps, if you find a way, or if I find a way, if we find a way to filter out the highly trending fair value gaps, which is something else I'm working on. So these are all still open, right? So if you would remove all these that are still open, because this obviously massively decreases the percentages of these, right? Because you have all these open ones, and I kept this at 100 days, so this goes further on. But you have all these open ones. Say you filter out these open ones, right? Then actually that percentage is going to be even higher. And all you have to do for that is recognize very trending markets and then filter them out for the data. So right now we're quite ranging here, and this is massively trending. So in that case, we could say, well, let's take those out because we know that these massive trending fair value gaps tend to stay open way longer. But I mean, look in this range. Like these are still open very long time, but look here. No fair value gaps open except for these here. And then, well, this unconfirmed one right here. But in this range, all fair value gaps get taken out. And there's been plenty, right? You can, like, now you don't see the ones that are already filled, but I mean, I don't know, if I go here, right, fair value gap there. So you can see just how well they work as magnets. Fair value gap there, bam, filled, up, filled, right? I mean, you can go on, filled, downside, fair value gap, filled, fair value gap upside filled, fair value gaps to the upside, gonna fill. See, I mean, you get the point. They just got filled, and we're gonna have statistical power for that. Now, the other thing I've been working on is because what I said, it would be cool to recognize when you're in range and when not. So one of the things I'm also working on is kind of like trying to explain when we're ranging and when not. I mean, this is still highly speculative. So one of the ways to do it is the Bollinger Wendt percentile, right? Basically what it says is that if it's low, then there's low volatility. If it's high, there's high volatility. And it's actually turning out to be the case. So for example, if we look at, so this is how, like this is when the value is between 0 and 20%, so somewhere down here. If we look at, for example, right now, we see the distance between P1 and P2 more than 10% is 84.2%. But what if I check only the high volatility areas of 80 and 60%? Then this 84% becomes 91%, right? Because in high volatile area, highly volatile environments, this obviously you're going to have way more chance to have more displacement. Whereas if I would go only for the lower end, 0% and 20%, you can see this becomes waiting, 76%, right? So there's quite a difference in it. And again, what I'm doing there is basically just filtering days on where the Bollinger Band with percentile is, trying to explain low volatility environments versus high volatility environments. This is going to allow us to do two things. One, it's going to allow us to statistically see whether price is more range bound, very involatile versus more trending. You can, for example, see that here price generally will be, going up here, going up very sharply, very high right here. And here we start entering, more down, more equal. But this is still like, it already explains it quite well because, this is obviously a massive difference. You can see that even more if I press just 0% to 20%, only 73% here. And if I press 80% to 100%, you can see this change to 93%. So this just means highly volatile. This means not volatile. So this is going to be a refinement on that what we already have, but I also think we're going to be able to use it on fair value gaps to determine whether or not like it is likely that the fair value gap will hold or not, or at least change the perceived probability on it. So that's what's coming. This one is they both are still work in progress. I'm gonna refine them way more. It's gonna be very cool. I'm very excited about it. I think it's gonna refine our approach dramatically, especially this one. The reason I'm using it is because right now, I say if you see these ranges, watch out, don't look for continuation trades. This kind of statistics is going to help us determine that and actually also see what it actually does to the statistics. That's why I'm developing this. And then the fair value gaps I'm developing because it's a whole new feature set and it's going to help us, take more trades in ranges because they act like magnets and then we can use them. So that's what's coming. That's what's coming. Let me close this and save. See you later. And we're going to have that on all time frames, right? So the fair value gaps, my intention is that on the 4 hour, you will simply, on every time frame, you will see, okay, we just created this fair value gap, this fair value gap, we have these fair value gaps, and usually they get closed within X amount of time. So that's what's coming. That is what's coming. And also on the weekly and every time frame, pretty much. This hour 10 still holding. Still holding strong. So long to 62K, right? Yeah. Yeah. Well, pretty much, I guess. Yeah. Yeah. I mean, we could even look into it now. Man, why did I close it? Let me just open it again. I mean, we did have that first tap, and we're definitely in a non-ranging environment. I mean, it has now been 13 days. I mean, what did I say again? Within 26 days. So within 30 days from now, there would be an 18% chance to fill it. So within this time period, 80 within this time period, 80% would be at least halfway filled. So at least until here. So yeah, could be alone. This is fucking awesome. Love to hear it, man. I think so too. Type of sorcery is this? Beauty of statistics, Auke. Beauty of statistics, my friend. All right, so I hope you guys enjoyed that little sneak preview, and now you understand why I said, okay, I don't think we're going to have that much more downside because this fair value gap is probably going to confirm. So that means we cannot go down too much, right? Which is already really valuable by itself, right? Because it means we can be conservative in our approach. If we were taking shorts, then, we want to be very careful. And indeed, this seems to act like a magnet, and within 13 days, at least 50% of this will be filled. This has not even been touched yet. So this is actually very rare that it's still not filled at all. I mean, it's been 14 days, not even tapped yet, although it's not very big. So yeah, I hope you guys enjoyed that little sneak preview. It's gonna be good. I'm working on it as hard as I can. I really enjoy working on it too. So I'm making fast progress. The only thing is that next Friday I'm going on my first holiday in 2 years. I will definitely still be working on a holiday, but I'll be working less, and I don't think I will be programming and developing. So I think it's going to be a release somewhere in October. Probably a release in October because I'm going for 10 days on a holiday until, oh no, end of September even. Yeah, so the release will probably be in October. But now at least I'm working on it. All right, guys. Thank you very much for tuning in. I hope you found got some inspiration on how to use the dashboard and what to look for and all those things. And I hope you got a little bit of excitement on what is about to come because we're not stopping. We're going to improve the dashboard, or at least as long as I'm working on it, the dashboard will improve. So many, many, many cool ideas within the backlog. Stay tuned for it. So once again, thank you guys. We'll catch you on the next stream and in the Discord. Have a good one, guys. See you in the Discord.